Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 5th of September, Wednesday. I hope you had an amazing Labor Day yesterday, but today we are back to business. So, first, we are going to review the economic data for today. So, for Europe, we got the PPI month over month and PPI year over year. We got negative, and you may be asking yourself, why are we reviewing Europe? Well, PPI going lower means that the European Central Bank may be pausing or maybe reviewing their monetary policy. And as you may know, all central banks talk themselves about the worldwide monetary policy and to follow more or less the same approach, despite the fact that economies are different. So at some point, we have to really see what Europe is doing, the same way China, we know about China demand destruction and problems with economy. US is not alone in the world. So one point I would like to raise and highlight today is that this is good for inflation because the PPI on the Europe going lower may boost the sentiment today. And we are going to see one chart later on the UK 100 that may be interesting for today's price action. So apart from the PPI, the only thing that we got today is factory orders month over month that came in the negative, more or less as expected, minus 2.5%. So factory orders going lower means less demand and less production. So apart from that, let's go straight into the charts because we, as I was saying, UK 100 index, this is the 100 index, the FTSE. So look at this move. This is the United Kingdom 100 index. And as you can see, we got really nice price action into the open. And we held this beautiful level. And now we are dealing with a little bit of downward pressure. But right now, we were boosting. This was the demand, the support that we got after PPI. So Europe, not Europe, UK, United Kingdom was the index was a little bit lower in the negative, but look at this move, 1%. Oh boy. So this kind of pressure to the upside helped today's price action, along with some other things that I would like to mention. So the first thing that we are going to review is the context in the Nasdaq, because I was saying that in the weekend recap. You know, we are here trying to battle this topping tail downward pressure. So be really careful because we are more or less, I think at some point we are going to see a pullback. But today, after this bad topping tail, I mean, we are holding these levels. This is the daily. Remember, if we go to the 30-minute chart to really see my levels, we can see that this is a huge level of support. This is also a huge level of support. We went down in pre-market, but after the open, we are seeing a little bit of bounce there. The same way we see bounce here, bounce here, bounce here, and the final descending resistance that we got in the 30-minute chart. But let me tell you something. We are not out of the woods. Today's overnight price action was really bad, as you can see, super choppy, a lot of movements either ways, a lot of, I mean, this is nasty price action. So where are we right now? This was the open. We established this local level of resistance, this local level of support, and we were just chopping in here until we finally broke to the upside. Why we broke to the upside? Well, I have something for you because at some point, Feds are also talking about a lot of things, and Fed Wallers today provided good information for the outlook in terms of Fed's movement. So Fed Waller said today, the recent data will allow the Fed to proceed carefully, so they are not going to be this hawkish, so they are not going to be this aggressive in the short term. They will proceed carefully and they will analyze everything. The recent data gives the Fed space before making the next rate. The job market starting to soften. This is really critical. They acknowledge that the job market starting to soften. Remember last week, unemployment rate and jobs showed that data is looking good for soft landing scenario. At this point, market were quite bullish. We pushed a lot, but we are in a context in which there is going to be a lot of resistance to the upside due to the spot in which we are on the daily and the amount of, I think, overhead bad fundamentals that we are analyzing. But this news, soft landing scenario on the table. If inflation keeps coming down, the economy is in pretty good condition. So really liking what Fed's doing here. One more hike is unlikely. Big boost to the upside sentiment to send the economy into a recession. So they don't think another hike, if they are doing it, if they do another hike, they don't think that we are going to be in a recession, because the soft landing scenario is their main scenario right now. And until inflation comes down, the Fed will have to keep rates up. We all know, markets know, that interest rates are going to be higher for longer, but good news. Fed Waller, soft landing scenario, keep rates up, another hike is unlikely. So this is what I wanted to share with you, because basically this was what pushed the market in two spots. The first thing is here, we moved up. This was at the time at what Fed Waller was speaking, and this level was not seen anymore. We got this pullback, and then we are basically pushing higher and higher and higher. A little bit of problems here, but overall we are seeing some kind of big push to the upside. And not only the Nasdaq, Apple is seeing a lot of, this is a choppy but trending up. Microsoft 1.56, look at this move. Tesla 3.63. Tesla has its own catalyst, because basically we have news that, let me review that with you. Production at Tesla manufacturing in Shanghai rebounded in August, and they shipped 84,000 more in August, and the trend is going higher. 64,000 in July, 76,000 in August, and 84 units finally. So good news for Tesla. We are super bullish on Tesla today. Look at these kind of pushes. This is clearly quite bullish right now, still having support and now pushing higher. So Tesla pushing the markets, and Amazon, Google, Nvidia, and Meta are the ones that are having problems. Meta is in an up trying to find the bottom 1%. Nvidia is really choppy. Google is in the red, but barely 0.18 in the red. Amazon 1% is the one suffering. The only thing concerning to me, apart from the fact that Fed Waller was saying those good statements and that we got news on some of the tech stocks and Nasdaq is in a tricky spot, is that banks are in the red. All banks are in the red. And also, as always, we have to look at dollar. And let me tell you, dollar is not looking good. This is a huge candle today, 0.52 on the day. And look at this move. Huge move for the dollar, moving higher, a lot of overhead support, and 0.52 with all the yields in the green means that the stock market is at least choppy. We are moving higher, but overall, we are just 0.70% in the green. So adjust your expectations. We are seeing some volatility, some choppiness, because we are in a really tricky spot. We are finding support, we are finding buyers here, but we are not out of the woods. This is not a huge movement up. This is just some buyers down here, but based on the fact that yesterday's price action, you can just ignore those because it was Labor Day. We are still up here, and there's clearly not clear move to the upside. Look at this rejection. So be really careful this week, because fundamentals are there, dollar is there, interest rates, futures and yields are in the green, treasuries are being destroyed today, -1%, and this is a correlation with the stock market that should pull back, should go down based on dollar yields and the outlook on interest rates. But Fed Waters, remember, Fed Waters, it's quite optimistic on the soft landing scenario and also on no hikes, at least in the short term. So that's what I wanted to share with you. On the 30-minute chart, we are not seeing clear trend. We are just seeing choppiness everywhere. The 5-minute chart is just, it's trying to trend higher because Apple, Microsoft, Tesla, and Meta are pushing. Look at Tesla. It's super bullish with these numbers on production in Shanghai. But Amazon, Google, and Nvidia are also big part of the Nasdaq. And this trend is no longer continuation for Google. So let me just clear that. Super choppy. So not the entirety of the Nasdaq is pushing higher. So that makes a little bit of difficult trading the price action, but you have to really be patient. Be patient for when the market decide the direction, because this is really not a spot in which you want to make a decision in either way. You just need for shorts to basically start retracing down here or finding support in here like the way we are doing here, and start pushing towards these kind of moves, last week high and all that kind of stuff. So really tricky spot. And last thing, crude oil, it's ripping. Look at this move. 1, 2, 3, 4, 5, 6, 7, and today 8 straight days in the green. Big level that was broken here. We tried to go higher, we pulled back. Look at this fib retracement pullback, golden pocket, beautiful push to the upside. And that is really bad, because if we take the futures, I mean, this was just really critical spot. We tried, we pulled back, and now we are pushing higher. And let me tell you, all this stuff, the next thing is just clearly this level at $93 per barrel. And you know what? Crude oil going higher means one part of the inflation really pushing higher, and this is not good for the markets. The same way dollar and yields are in the green. So be really careful on the markets today, because there are some divergences on the market. Despite the fact that we are moving higher, we are not doing it in a beautiful way with huge rejections. So be really careful and adjust your expectations, because today, first day of the week, it's not worth it. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel. I upload videos every single day for market forecast, market updates, and market recap, and a weekly recap on the weekend that I'm seeing that you guys like it. So thank you for that support on those videos. And remember that discipline and risk management are key for your success. Stay safe, everyone. Manage your expectations today and see you tomorrow.